What are the markets telling us here? Let's look at the Dow, because we're now in, what, correction territory, 10% off the 52-week high.
Sure. What we're seeing right now is typical. When you're seeing market highs, typically we would see pullbacks of 4 to 5%. But with the increase in volatility, 8 to 10% has become the norm right now. So yes, we're seeing this panic sell-off at the moment, and there's a saying that as the month of the first 5 days of January go, the rest of the year is going to go. I think that what we're seeing is a typical correction. We're soon to reach a floor, and I think we're going to see a technical bounce there. But earlier on last year, sort of towards the beginning of January, February, I pointed out that we're going to reach key levels on the Dow. If we don't break above 18,300, then the odds suggest that we're probably going to move towards a downside heading into 2016, which is exactly what we're seeing right now. What we're seeing here on the Dow Jones is the key upside levels. So we didn't break past the 18,300 level. The real floor on this is unbelievably at 14,600. So we're still quite a long way off from that support level. So my view is that in the short term, we're going to see a short-term bounce. Then we're going to see a rally, but we still have got an increase in volatility coming in towards the end of the first quarter.
So what level are you talking about a bounce from then, if we just look at where the Dow's trading
Very
now?
short term, looking at 16,300 to 16,175, so we're close to that at the moment. I expect to see a rally from there. Again, we'll see 200 to 300 point rallies coming in as well. So the uncertainty is going to be around for the next few months at least. But people are worrying now, is this the top? And I don't think it is. I still think we've got quite a way to go coming over towards the end of the year.
I wanted to do this chart just because a lot of people have been sending it in, Sandy, and it is interesting that the peaks and the time frame look similar-ish. So this is 1929 in the United States, and then it's Shanghai 2015. And charts can often be misread, and you can try and force the issue. But the point is, the chart only represents price action and sentiment. And when you get to peaks, it means that there are more sellers and buyers. And when you get to the troughs, there are a lack of sellers, and suddenly the buyers start to get interested again. To what extent could we look at this chart pattern and think that what comes next may be similar?
Back in November, I came here and I pointed out a very specific chart. It was actually related to the Dow Jones going back to 1928. And I said there's a very specific cycle. It's an 84-year cycle. So if you go back 84 years at a time, and we take a look at the economy, I tend to look at the Dow compared to the S&P because of the long history and the track record that we have on the Dow. But there are, from a cyclical point of view, we're in a time frame right now where we're likely to see extremely sharp drops to the downside. So that the chart that I pointed out back in November, we're still in that time frame. We don't get out of this time frame until 2018. So the idea is that in China, a lot of people are mostly on the bullish side. The last 2 years I've been spending most of my time in China. We spoke to the government agencies mid last year, and they're all still on the bullish side. They said there's just no way these markets are going to fall. And if they do, we're going to contain it. And obviously you've seen that. They've been not able to contain these declines right now. The circuit breakers are a lack of, basically. So the sentiment play comes back in again. And it's really crazy in China. A lot of the people, what they're doing is they're looking for 5 to 8% returns per month. And they're now looking at fund managers who are able to guarantee that, which is absolutely insane. So they're still on the bullish side. And when they start seeing these declines, what they're looking to do is panic. They're not looking at buying in at, say, value, or they're not looking at buying in at technical levels. All they're seeing is just panic and then just bailing out. So bearing in mind that it's still a new economy, I think that they don't have the experience of dealing with these bear markets, and I think that it's just going to allow them to free fall.